Hello and happy Friday, everybody. This is Brian McCarthy at Compass Story Residential in Hoboken, New Jersey. I hope you are having a great day and have a great weekend ahead of you. Today is Friday, February 4th, and I am coming at you today with some national market news for our market monitor today. Looking at kind of the end of the year 2021 wrapped up on a nationwide level, going over some stats there. I have a slideshow I'm going to share with you here. And if you missed it last week, I have on the website a bunch of stats for New Jersey posted on there for year-over-year reports from 2021 to 2022. I'll share that link below so that you have it. If you don't have the email, please sign up on my list. I send those out basically every month, and I go over the stats in these monthly videos. But I have all the slideshows there, or all the slides available there for the numbers. You can check them out on your own. You can have access directly. It has every single city in New Jersey for that year-over-year report. So it's really handy. I posted all the local Hudson County markets just in the slideshow, but there's a link there as well that if you want to look up any place in New Jersey, it's got it there as well. So without further ado, I'm going to come into my presentation here for today's market monitor. And as always, if you guys have questions or comments or feedback, please let me know. You can DM me or give me a call, shoot me an email. And please, if you're not getting these stats, let me know. I'd like to get those out to you via email, or you can check out my website. The link is a little bit long. It's a Wix site or whatever, but I'll put it in the thing below in case you're not getting this by email. So let me share my screen. I want to share so that I'm on it as well. So hold on a sec. All right, cool. So I'll stay up here in the corner to narrate. All right, so I know we're in February, but this is January slides wrapping up 2021. I want to start off with a quote because I like these. This is the founder of Calculated Risk. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates even more sooner than expected due to the recent uptick in inflation. But I believe that one thing is for certain: inventory will tell the tale. Right now, too, we are at extraordinary record lows on inventory, and things are moving very quickly. So here we are, housing inventory lower than last year. So this is December 2021 year over year compared to December 2020. In New Jersey, we are at almost minus 30%, or 30% lower than we were wrapping up the year there in December. And you can see nationwide, we are super low. The only place that is up is Idaho at 55% more. Months inventory for home sales since 2019. This goes month by month. You can see it's kind of a roller coaster here, but over the last year, months of inventory, or what we call the absorption rate, is pretty low. An even market would be a 6. So 6 to 12 is high, kind of a buyer's market. 6 and below means that homes are moving quickly. And if nothing else came on the market right now, things would sell at the end of November in 2.1 months. It would take 2.1 months to absorb everything on the market, which is very quick. Going over buyer activity, showings are still strong and greater than last November. So this is Showing Time's monthly index, and they have almost a monopoly on showings right now. Pretty much every realtor and every brokerage uses Showing Time because it's very convenient for scheduling showings. So their index here is just showing, like on a daily rate, what the number of showings are like in a particular area. So as you can see, November 2021 compared to 2020 is still very high at 176 compared to 156. Showings crushed the pre-pandemic numbers. So this is another Showing Time index here with showings going 176 almost compared to 156 this time last year. At the end of November anyway. Another quote from Michael Lane, VP and General Manager at Showing Time. Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains very strong. The fact that Every region showed a year-over-year increase, indicates that buyers are undeterred. It speaks to the desire to keep searching for their next home. And ain't that the truth? So pending sales are higher than pre-pandemic numbers. If you look back to 2017 through 2021, 2020 was still a little bit stronger on pending home sales, but only by a little bit. And these past 2 years have been a lot stronger than the 3 years previous, 2017, 2018, and 2019. Home equity, always a good thing to track here. This is a quote kind of more for us realtors because it was at the realtors conference and expo, but the lack of insight around home equity presents an opportunity for people like me, your real estate expert too. We're always looking at touch points, things to talk about with you guys. So equity is something, if you are renting a place and you don't own something, that you are missing out on. You're basically just paying rent and you're not seeing any return on that investment. You're paying for a place to live by the day, by the week, by the month, by the year, and it's not going into your pocket at all. Equity is something that's obviously very important and integral and just a key piece of owning a piece of property. When you own it and you're paying your mortgage down, your equity is going up. If you start at 10% or 20%, every monthly payment that you make, you're owning more of that home. So your equity is growing. That is the biggest difference between someone that owns their home and someone that is renting. So it's a huge opportunity there. Real estate, compared to, like, let's say the stock market right now, is actually a pretty strong investment and actually kind of hedges against the stock market, which is extremely volatile, because pretty much around the country, but especially in New Jersey, even if a specific area doesn't have a huge appreciation, if it just remains steady, we're still kind of seeing home prices go up at least as much as inflation right now. So you can expect at least a small, single digit appreciation, which is pretty conservative, if you ask me, in your equity, which is great. Or in appreciation, which is something different than equity, but you're getting equity in the home that you bought, let's say for $500,000 as you pay it down, but then you're also getting appreciation as the market around you goes up, but as inflation goes up as well. So two big opportunities there for me to talk to you about that. If you have questions about it, I know I went over pretty quickly, please reach out to me. I'd be happy to sit down and talk with you more about how that works. All right, so this is CoreLogic. They're a big data tracking company around real estate. So their Q3 homeowner equity report, just some numbers here in this chart. So average home equity gain for U.S. homeowners, across the country with mortgages is $57,000. Pretty awesome. Year over year percentage increase in equity for U.S. homeowners is 33.1%. Huge right there. 3.2 trillion is the year over year total increase in equity for U.S. homeowners with mortgages. And a quote here from CoreLogic: "This summer, home price growth reached the highest level in more than 45 years, pushing equity gains to another record high." So congratulations to you if you've owned a home here for more than a year, more than 6 months. Here's a map looking at this homeowner equity growth year over year, comparing Q3 of 2021 to the year prior at 2022. If you look down here at New Jersey, the average equity gain is 58,000. So right in line with that national stat of, or national average of 57.7, and just really strong all over the country, especially on the West Coast. So Frank Martell, president and CEO of CoreLogic, says not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid a distressed sale, but they've also enabled many to continue building their wealth. So that all those headlines we were seeing a couple months ago, a year ago, about all these homes going to foreclosure was actually proved to be false here. U.S. households own 36.8 trillion in homeowner occupied real estate. So that's the number that we saw from 2 slides ago. $11.5 trillion in debt, and the remaining 25, so out of that 36, 25 trillion in equity. So in inflated and adjusted terms, homeowners had an average of 294,000 in equity in Q3 of 2021, which is a historic high. Forbearance here is finally falls below 1 million. So you can see on this graph, it has steadily gone down since things started opening up in the pandemic in May of 2022. That's kind of when restrictions and stay-at-home orders and everything were relaxing a little bit. So forbearance was pretty high, and it just slowly trickled down as equity has grown in people's property, which is great. Nobody likes to see someone lose their home, right? So here's what to expect in the 2020 housing market. 2022 mortgage rate projections. So this was something that they kind of put out here or put together right at the end of the year in 2021. And these are just projections, but I will say as we finish this, that our rates are actually a little bit higher right now this is for a 30-year fixed mortgage. So I like doing the average here of all four, but these are four big companies that provide mortgages and track these numbers. So they're expecting in Q1, the average to be 3.3%, Q2 to tick up a couple basis points there to 3.45, then 3.55, and then ending in Q4 at 3.7. Well, right now, and I'll show you at the end here that over the past at least 2 weeks, probably 3 now, we've been holding steady at 3.75 for an average interest rate for a 30-year fixed rate mortgage. The senior leader of research at CoreLogic says we may see a little bit of an uptick in foreclosure rates in 2022, just a slight uptick though from an extraordinary low level. We're not expecting to see a big increase. We expect delinquency rates overall in home mortgages to actually continue to remain quite low. That's another good sign. Home price acceleration, has it peaked? It's a good question and kind of still open for interpretation. We're going to have to track this one for a while, but the percent year-over-year monthly price increase here went up quite a bit over the year in 2021 here. So starting off in January, staying pretty low. It went up quite a bit around that summer selling market and has remained pretty steady throughout the end of the year. Home price forecast for 2022, the average of all the separate companies are in blue. The average there is on the left, which is 5.2%. So, that is to say, if you were to buy a home or close a home here in January, next January, the average home price forecast, if you were to list it again next year, 12 months later, you could probably list that and sell that for 5.2% more. Pretty awesome. So overall, we're going back to the senior leader research at CoreLogic, a quote here. So overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. That is the last slide I have for you guys today. I like to keep these short and sweet so that you're actually motivated to tune in, which I always appreciate. Going to mortgage rates here. So this is 7-day tracking starting from last week on the 29th to today. We're at 3.75 for a 30-year fixed rate. If we look at 30 days, that started off on the 20th. And right here, it fluctuated starting, 2 weeks into the year at 3.625 up from 3.375 and is going back and forth here from 3.625 to 3.75. And, if we continue to see this trend as they tick up a little bit, now is definitely a good time to be looking and get off the fence if you're thinking about looking before interest rates go up. I know people that are under contract right now that have a mortgage rate that's locked in, that is, around 3.5 or even lower, and they want to close before that rate lock expires because it is a 1/4 point higher than right now than it was what they rate locked, which is good for them. So as I said, let me see if I can find it here. Just want to point you guys in the right direction. Aha. So This is all because I don't pay for this site just to have an easier domain name, but it is very easy to find, guys. B McCarthy 39 Wix site. It's Jersey Home Stats. So this is my market monitor from a couple of weeks ago, and here are the slides. It has Jersey City, Hoboken, North Bergen, Weehawken, Bayonne, Union City, and just some stats here of year over year that we track here right at Compass. Each one has two slides with a bunch of different graphs tracking, just some really handy year over year stats. So the total number of price sales, the average price, the gain in or gain and increase from that sales price, things that are under contract, contracts by price range. It's all pretty cool. So you can see that here, or you can click on this button to access all the market slides, which takes you here. You can look at individual reports or the latest report. You can download it, and then it goes by alphabetical order, and you can go through every single county there, or every single city in New Jersey. If you're looking at one in particular, or you don't live locally in my area, but you want to still keep an eye on the stats, it is all there and available to you. So once again, great seeing you guys. Thank you so much for tuning in on these weekly market monitors. I appreciate each and every one of you. And feel free to reach out to me with any questions, concerns, things you want to talk about. I am here to be your resource. You can reach me on my cell phone. It's 617-851-9141. My email is brian.mccarthy@compass.com. Or, I'm on social media at Bry Says is my Instagram handle, or Brian McCarthy Realtor on Facebook. So hope y'all are doing well. Have a great weekend. Stay warm out there. And I will look forward to seeing you guys next week. Thanks. Bye.